Yes, sir. Please go ahead, please.
Yes. Hi. Yes. Welcome all to the Q3 FY22 earnings call for Bharat Electronics Limited. We have with us the management of Bharat Electronics. From the management today we have Mrs. Anandi Ramalingam, Chairman and Managing Director of Bharat Electronics, Mr. Dinesh Kumar Batra, Director Finance and CFO, and Ms. S. Srinivas, Company Secretary. Thank you so much for taking time out for this and giving us this opportunity. Ma'am, I would request if you could give us opening remarks, initial, and then we will open the floor for a Q&A. Over to you, ma'am.
Fine. Thank you so much and welcome you all to this meet. We also have Director R&D, Mr. M.B. Rajshekhar here, just to answer to your queries on the futuristic R&D work which we are doing. So he is also here and we welcome him for this meet. You would have seen, we are very pleased to inform you that we have done quite well in the Q3 and those you must have seen the results which have been uploaded. I only want to, we will have a detailed presentation to you regarding the financial parameters, but I just want to tell you that as far as order acquisition is also concerned, we have been doing quite well. And the order book today stands at around 56,000 crores, around nearly 57,000 crores. And noteworthy in this is we have got very good export orders, and the export order acquisition this year is nearly touching $300 million, which is again a record which has never happened in the history of BEL. So we had a good order from a company called Airbus from Spain, about $93 million. And another important export order where we are offering our design services along with the manufacturing of the system is for a company in US, for whom we'll be supplying our IoT designed and manufactured by Bell products. So actually it is a very big order. It is about $600 million order. But the commitment is that first year we have to supply worth $73 million. And based on that, the remaining will get validated, and then we can supply the remaining if it meets the requirement and if we are able to meet their schedule as well as the design requirements which they have given us, which they have told us in a very broad manner. So we are trying to design as per that, and as and when we proceed further, based on the progress of this, the other order will also is likely to get approved by them. Right? Of course, it is a part of the order, but it is not yet active. It will get active once this is done. So that is a very good beginning for us because exporting our design services, especially to a company in US, and it is a very well-known company. So it really gives us that much pleasure and satisfaction that we are also able to do something which the world is looking at. And coming to other export orders, we have got, of course, a good export order from Spain. As I was telling you, it is for a missile approach warning system along with a radar warning system and a countermeasure dispensing system. This will also be spread over 5-6 years. But it is first time that we are getting an export order for an airborne platform. And this again adds to, it's a real achievement for us. And we will start maybe the deliveries from last quarter of next financial year. Then we have some good export orders from various other countries for which, and these are all not based on some grant or LOC extended by the government of India. It is a real export order. So we are also targeting and looking at our mission of achieving about 10 to 15% of our turnover through exports. Coming to the service side also, we have been doing quite well. Currently it is 10 to 12% and I'm sure it will continue to do so. And we are also trying to see if we can have the same different type of business model for offering our services like software as a service or smart city as a service. Just like how we were offering our jammers as a part of our service portfolio to all the examination centers. So with this opening remarks and with, I would also like to confirm to you that, okay, we are having a crisis of semiconductors not coming in at time. Whatever was the projections given to us by various vendors, there has been slippages, but they are trying to cope up. So we are also keeping our fingers crossed and hoping that the deliveries will happen soon so that our fourth quarter deliveries do not get affected. Nevertheless, we assure all our investors once again that compared to what we did last year, there will certainly be a growth. But how much of growth, even though earlier we were maintaining about 15 to 17%, that looks little difficult right now, mainly because of the crisis in the semiconductor industry. But maybe another month or another few days, we will get a better picture of this. So thank you all once again for joining us. And our Director of Finance will give you a short presentation on the financials, post which we can take up your Q&As. Thank you so much.
Yeah. Good afternoon. Can I start?
Yes, sir, please.
Yeah. So, as CMD told, that this year is very good for us. So for our order booking and especially the export orders are concerned. And despite this year's interruptions, global interruptions in supply chain, and over and above the semiconductor shortage all across the economy, and those are being rationed by the big chip suppliers. I am happy to share that we have made very good figures of Q3 year on year and the 9 months ended till December 21 over the previous similar period. So if just we have a look, next. Our turnover in Q3 year on year has made a growth of 62%. It's at 3,656 crore. EBITDA has grown year on year in Q3 at 87%. Profit before tax has grown 114%. And profit after tax has grown over 122%. So though this year was difficult, the previous year, of course, the pandemic was on, but this kind of supply chain on the account of semiconductors was not there, and which is the lifeline of any electronic industry. Still, we have achieved these figures, and earning per share is 2.39 rupees in December 2021 vis-a-vis December 2020 when it was 1.08. Next. And so far, the 9 months period is concerned. Here also figures are very encouraging. Our turnover is standing at 8,842 crore, which is 25% more over the previous period. EBITDA is 44% high at 1,741 crore. And profit before tax is 62% and profit after tax is 69%. Earning per share is almost doubled, that is 4.95 vis-a-vis 2.93. Next. As CMD Madam has already explained you in her opening remarks that around 57,000 crore, precisely on 1st January, 56,568 crore is our order book. And noteworthy is that first is avionics package, which is totally indigenous efforts, which will be going on the Tejas aircraft, and then export orders with the silver lining of supply of IoT devices to US, where it's not just manufacturing, but it's our design, developed and manufactured equipment which will be put in the 5G networks in US. So there's $73 million, which is just the beginning. So these are the highlights till the 9 months period. Fourth quarter, as you all will be looking forward to, till 9 months we have managed with all the shortages, but with the severe crunch, not only on the semiconductors, but on the logistics side, where our materials are ready in the other countries, but we are not getting containers and the ships. Still, the best of the efforts are on, and I'm quite hopeful that we will be able to manage better growth over the previous year, even if some hiccup comes in the last month, when all these shortages will get accumulated. And EBITDA margin, again, I confirm this as I'm seeing around, it will be around 20 to 22%. We will be able to maintain. So this is on our side on the financials. Now we are open to your questions.
Sure. Thank you so much for that opening remarks, sir. Participants, please use the hand raise feature for asking a question. Once your name is announced, please unmute yourself and go ahead and ask the question. We will wait while the question queue assembles. Yeah, the first question is from Jonas Gupta, Birla Mutual Fund. Jonas, please unmute yourself and go ahead.
Thank you for this opportunity. Couple of questions. Firstly, on the execution run rate. So basically, the company had not highlighted this issue of chip shortages, right until the second quarter. So what really sort of triggered this thing where in the third quarter we are facing such a tight crunch? And when, while it's understandable that, the 15 to 17% revenue guidance is now sort of looking sketchy, but do you believe that at least, 10 to 12% kind of growth can be achieved in this year, basis the supply chain shortage? And a connected question for next year is that, with all the order inflows that we've seen this year, our order book is still just about 3% higher YOY. So what kind of growth should we expect in revenues for next year, given that all the benefits of this emergency procurement orders, etc., are getting executed in FY22? So for FY23, what kind of levers you have to for sales growth, sir? Yeah, so that's my first question.
Yeah. First, that up to the first half, we were maintaining as all our suppliers were committing us that all the orders we had placed, and they were all committing to us that they will be supplying. But as this started getting more severe and severe globally, and as you are listening around that automobile companies, when their inventory is piling up and just for the chips, they are not able to manage. So we started feeling not directly components being imported by us, but and very large projects what we execute. These are C4I networks where the routers and the switches, etc., are very vital component. So the Cisco and all, when we were crossing third quarter, so they have started showing their nervousness in able to supply those. And also, more than that, many things in the Israel and this European countries, they were more locked down. Of course, in India, we were all working, except some smaller period of 9-10 days when we closed down our factories. So now they are not getting containers, they are not getting ships. So it started getting aggravated now. Otherwise, you can see our results. These are fabulous if we compare from the previous period. So that's the reason we are highlighting it now. And in fact, management had taken up that we'll buy components even at higher prices for the shorter deliveries. And all those things were also, we were adjusting, but then they are not able to maintain the supply chain. That is one. Your second question, whether still we will be able to maintain 10 to 12%, answer is big yes. Surely 10 to 12% we will be able to maintain if in March something bigger doesn't happen. So far, whatever commitments we are again having with them, Madam is meeting and having video conferences with these the chief executives of the global suppliers. So they are all giving us assurances that still they will be able to supply a major part of that. So 10 to 12% is achievable. We are quite hopeful on that. And according to that, only we are saying that 20 to 22% EBITDA still we will be able to achieve. And so far, your next question, of course, I will give one figure, then I would like CMD to give you more assurance. Yes, 15 to 17% again, as now we hope this, after this Omicron goes away, things will be falling in place. We will be able, again, targeting the same kind of growth of 15 to 17% next year. Now, madam.
Yeah. So 15 to 17% next year is no doubt at all. Other than the major projects, whatever is left out from this year, like ISECS, Missile System 7 Squadron, Akash, and other things will continue. And other than that, we have some EW systems like D-29, MiG, Mi-17 upgrade and other orders which we have got and which will be start delivery from, which will start seeing the deliveries from next year onwards. So 15 to 17% for next year is no doubt at all. You are right, Jonas, that the order book has grown only by 3%, but we are seeing how much. I mean, it may not be this year or the next year also. It will be in the similar range of 16 to 17,000 crores. But after that, it will see a steep hike. So then, that is why we are telling that this growth of about 15 to 17% will be able to sustain over a longer period of time. Because on the third financial year from now, we will like to assure you all that big ticket items like QRSAM and MRSAM are likely to fall in place. All the initial indications from MOD is that they are taking whatever is the requisite approvals. And by the time we get order, I'm sure it will take about 2.5 years. And that is why with that confidence, we are telling you that over a longer period also, this 15 to 17% growth is possible and it will happen.
And I would just like to add, madam, though the growth of order book you are seeing at present, but still 3,000 to 4,000 crores worth of orders are in pipeline, which are quite likely to happen before 31st March.
True.
Understood. The second question was on the trajectory of our gross margins, which is basically material margins, which are now, for the quarter, we've gone down all the way down to 40%. Just 3-4 years ago, the average gross margins used to be about 45-46%. Given the sales mix for the next 2 years, do you believe that these margins can go down further, or you think 40% is below which probably gross margins will not dip?
Actually, if you see this year, our material consumption has gone slightly higher. One is, of course, a reason that the shortage of the semiconductors and the suppliers are increasing the prices. And that's not the only reason, but some of the big ticket projects what we are doing, these are G2G projects where these work shares are already defined. But the silver lining is, that's why our director R&D is here, that we are taking very big ticket indigenization program. So I'm sure this 40% gross margin will definitely, we will be able to maintain. In fact, the worst is getting over now, because even the LRSAM and all, our now more indigenization part, which is to happen from the next year and after that. So we are very sure that this kind of margins we will be able to maintain. And I would request DRND to give some of our indigenization programs to our investors.
Yeah, actually Akash, which is going on, we have got 97% of indigenization. It is going to be followed with Akash Prime, where again we will have such kind of large indigenization. Akash 1S is another thing that is going to come up. Then we have got this URSAM, NARSAM.
Even LRSAM, TR modules.
TR modules also, we have got export order now for from Thales for LLTR. And other places also now we have got the capability and developed many MMICs on our own now. The design is done by Bell for the TR modules of various projects, which is going to enhance the complete indigenous content. Though this will be made abroad, but the whole design is owned by us, and so the costs are going to be nationally. So we have got product development innovation center where we are doing a lot of indigenization to the extent that most of the critical LRUs that we are getting from abroad are going to be indigenized in a time-phased manner. So a lot of effort is there for the indigenization, and many new projects that are going to come up will have indigenous content well above 70%.
That's helpful.
In fact, margin should become better, in fact.
Yeah, much better.
Can just squeeze in one more? So this recent directive from the MOD, where we are clearly seeing focus towards pushing local projects, or they're cancelling AONs for imported equipment and looking to place that. So in that light, ma'am, if you can highlight certain projects that you think can actually get fast tracked, which may not have been in the prospect list for say FY23 or 24, but you think that seeing this recent directive, these things can get fast tracked. So can you name a few of these projects? And for FY23, can you name 1 or 2, 3 large projects that you're looking for that will drive inflows? That's my last
maybe
question.
What can hasten up is of course QR SAM, because there was a case for Buy Global of similar QR SAM which has been turned down by the ministry. So our indigenous QR SAM should take precedence over that, and that is why I said that they are now taking the initial approvals are being taken up, and if not in 2 years, generally even if they speed up, it will not happen before 2 years. So that is why I said 3rd year from now. So this is one big ticket item which will surely happen. And where we take the advantage of the initial, the government directive that no more Buy Global cases will be allowed.
Sonars and all.
Of course, sonars and all is already there. See, some of the sonars also that which they were procuring earlier from some European companies, that also it will get diverted to Bell. But of course, it will not be in the range of QR SAM where it is 30,000-40,000 crores. But all this will add up.
And this particularly you are asking about the defense contracts, but this indigenization and the focus on indigenization is bringing impact more on the other areas. Hello. Just a minute. I was answering that. Then the civilian side, that is the metros and the railways and the aviation sector, that will also be contributing. Will bring the positive impact of thrust on indigenization for Bell.
Thank you and all the very best.
Yeah. Thank you.
I would request all the participants to limit their questions to 2 per participants. So we have next question from Deepak Narnolia. Please go ahead.
Yeah. Hello. Sir, yeah. I have a question about your EBITDA margin. So Jonas has already raised this to you. I just wanted further explanation on that. Actually, your gross margin last year in FY21 was 44.4%. And because of this chip shortage and commodity prices are also up, this year gross margins are 41.5. But still, despite this lower gross margin, you have maintained your EBITDA margin very beautifully by cutting your overhead expenses. So I just wanted you to throw some light on this, that this overhead cuts are structural in nature, or these will come back after this, these were specific to this particular year. And this, how the margins are going to behave, like gross margins will be at this kind of level only. Then if the overhead comes back, then you won't be able to maintain your margin. So I just wanted to, little light on that.
Sure. The first of all, though, we have suffered more on non-supply of the components, not on the higher prices, because we have booked our orders earlier. Number one. Number two, if you see our other operating income, that is increasing, and because of the now lower provisions or previous provisions withdrawn. And also the expenses are under control. So other expenses, etc., those have gone down. So the combined effect is happening that we are able to maintain the EBITDA margin of around 20 to 22%. Hello, does it make sense to you?
Yeah, sir, this is what I was asking actually, that gross margin has gone down and overhead cuts in this year were huge. They are continuously declining by somewhere around 30-35% every quarter. So So this kind of cut in, this level of overheads will be there in the future years also, or this was particular to this year? And this is what I wanted to know, because you said that your gross margin you will be able to maintain at 40% types. So
Yes.
so is it due to some reclassification, or how is it that overhead is gone down so significantly? And
No, not overheads. Basically, you see, with our turnover is increasing, but manpower is not increasing in the same proportion. So our employee cost is coming down. Material this year is slightly higher, but with our indigenization efforts will, bring it under better control. And at least I'm looking for that 2 to 3% material consumption should come down. And of course, we are controlling our other expenses. All that cumulative effect that we will be able to maintain this.
so, sir, actually, this other expenses cut now, this 30-35% cut is huge. Is it
Yes.
cost control, or is it some reclassification, or what is this?
No classification. That's what I'm saying. Now we are relying more of our indigenous developed equipment. Last year, when we were to give 30,000 ventilators, a huge investment expense has gone on the TOT and the royalty of that. So that was around some 170 crores or so. So this year is not there. And now we have developed our own ventilator, and now onwards, whenever this requirement is there, it will be our own. And it's not only ventilator, on many other equipment which we are doing, that all the investment what we do on our in-house R&D development is bringing fruits. And number of patents our design engineers are getting.
So it means that your other expenses will be at this. It can have 5-10% growth. Currently, it is at 915 crores level, and I am not going to see significant increase into this.
Yes, definitely. There will not be any significant increase.
Okay, that way, sir.
In fact, I tell you now, this time, some traveling expenses are compensating the other expenses which we could bring down, because wherever our people are going abroad, some 13-14 days quarantine, but to meet our commitments, we have to depute our teams. Same thing is happening in the domestic travel as well. So, in fact, we will be further able to control these expenditures next year onwards.
See, in that case, sir, the kind of sales growth you are targeting, with that sales growth and 40-41% gross margin, and this low level of other expenses, you can definitely beat your own margin guidance of 22%, I think.
You are right, but we are just taking, we don't want to overexcite the market by giving and then not able to do. So we would like to maintain around 20 to 22%.
Okay,
and
thank you.
More and more now money will be going in the indigenous development, like all of our R&D setups what we have. So we'll be pushing more money, as government is also telling us now, as you know, this fab putting fab facilities in the country, and BL is also considering it. So these kind of things will require big expenditures, investments. So taking care of all this, we would like to keep our EBITDA margin at 20%.
So all this indigenization effort by the government, this will benefit you in the sense that you will be sourcing your components from the indigenous players, and they quote lesser than the imported price, correct?
Yeah.
Definitely, but it is not going to so soon. At least lead time of 4 to 5 years going to be there. So we are talking.
No, I'm talking about gradual trend.
Yes,
it will happen. Definitely it would happen. Now, as the government guideline is, whatever is available in the country, you can't import. So it is for everybody. And because BL is harbinger of indigenization decades before, when this has become a buzzword, we will be benefiting definitely.
And one more thing, question, sir, if you allow me to ask you. It is about only one small question, Kunal.
Yeah, please go ahead.
So this is about your sales development, sir. Earlier you had been guiding a 15 to 17% growth.
Yes.
So now can you with this chip shortage, now can you guide us, more specifically, what could be the year-end growth for this year?
Yes. In fact, I had answered this when the first question was asked. It is going to be between 10 to 12%.
Okay, it's going to be 10. Means in that case, fourth quarter could be declining sales. If it's 10 to 12%.
We are 9 months.
Hello.
See, if you see all our quarters and how much was last year? This 7,006. 9 months was 7,061, and it will be more than this fourth quarter. Yeah, it's not declining.
If you achieve 14% growth, that would be only 2% growth in the fourth quarter. So
I'm talking year-on-year.
Yeah, for year only, I'm saying that if you maintain this 10 to 12%, then if you maintain 14% growth for the year, then fourth quarter will be flattish sales. So I just wanted to know whether you are.
If you see the complete year, last year we have done 13,818. We will be, if we do between around 15,500, then it will be 12% growth. So it is going to be between 15,000 to 15,500. This is my assessment at the moment. Yeah.
Okay. Okay. Thank you, sir.
Thank you.
Thank you, Deepak. I request participants to limit their questions to 2, please. We have the next question from Bhavin Vitlani. Bhavin, please unmute yourself and ask your question.
Yeah, thank you for the opportunity and congratulations to the entire team for an exemplary performance. My first question is, MOD came out with a list of components which have been sourced by various TPOs, and VAL was also part of it, which have to be indigenized, which are currently imported, and there is a timeline also assigned to it. Do you believe that this could cause some temporary disruption? And if you could give us some color about the efforts towards indigenization, and can that lead to some short-term impact?
No, you are right. MOD has released a list, but it will have no short-term impact because they have asked us to prepare a roadmap and then give it. It's not that abruptly they are going to tell that you cannot import from now onwards. It will be over a period of time. For each of these items, we have given them a detailed roadmap on when exactly our indigenous product or a subsystem or a component will be ready. And once it is ready, obviously, we are very sure that we will get the benefit of the cost in that because they will be manufactured at a much lesser price than what we are paying right now.
Actually, you take it this way also. So far, indigenization is concerned, BL is much ahead than all other players which are coming in. So, if we are not able to do, definitely others will not be able to do at all.
Correct. And one more thing I would like to add is, see, Bell also, whatever little they were importing earlier, we were not able to indigenize because every time the services used to tell that if you go for an alternate part, you will have to go through the complete trials and evaluations once again. So that was a big deterrent for us. We thought, why to again go spend 2-3 years in just trying to include an indigenous part. So we also took the easy route because government was not supporting us, DGQA was not supporting us. But now government is very clear that nothing doing, whatever is the part that is indigenized, they have come out with very clear policy on how the trials has to be expedited and how limited trials has to be done for each category. That has been very clearly defined. So the government focus is really helping us.
Yeah, thanks. My second question is to DF sir. If you could just help us with data on what has been the provisions and reversals in the current quarter. You did mention about some reversal in provision.
Yeah, when ventilator we made, so there was a warranty provisions for ventilator, and those we have withdrawn. Or other some important. Basically, that was warranty provision, and some of the because of our collection drive, some of the previous bad debts our teams could collect. So that also we have withdrawn. Major was the warranty provision on the ventilator.
Would you be able to quantify these provision reversals for warranty and bad debts?
Immediately, if you want the figures, what was that? Yeah, there was some 40 crores of provision, which was for ventilator project, which we could withdraw. And this year, some 54 crores worth of less provisions than the previous year.
Sure. So the total delta is about 95 crores versus the previous year.
Total is 54, including that 40.
Okay, sir. Yeah. Thank you so much for taking my questions.
Yeah.
The next question is from Charanjit Singh. Charanjit, please go ahead.
Yeah, hello. Am I audible?
Yes.
So thanks for the opportunity and congratulations on great set of numbers. Ma'am, my first question is regarding this targeted growth of around 15 to 17% top line growth in the next financial year. So if you can touch upon, some of the larger orders in our order backlog in terms of their, ability to scale up in terms of execution, as well as the customers' ability to take the deliveries at the right time, or are there any delays which we can see in any of the larger programs? That's my first question.
See, next year, the Akash missile system, the LR-SAM, IACCS, then all the naval projects, including naval sonars and communication systems, these will continue. And a part of the emergency procurements also. See, emergency orders, whatever we got, some we have got in the month of July, August. So that will get that 12-month time period gets over in August 22. So these were also slated for dispatch in the coming year. I mean, not in this financial year, in the next financial year. In addition to that, whatever contracts we have got this year and what we are likely to get, especially on the EW segment, what I was telling you, a ground-based EW and an airborne-based EW, that they are all major items which is slated for delivery in the next financial year.
And madam,
so this itself will come to around 12 to 13,000.
EVM, VVPAT is
and of course, EVM, VVPAT is anyway there, for which we have already got the orders, and bulk of it will get executed in the next year. So about 1,300 crores will come from EVM, VVPAT itself. So next year, there is no doubt about it. Only thing is the semiconductor crisis. As of now, they have all our suppliers are telling that there is a shift by about 3 to 4 months. So we are hoping that next year we will be able to, the gap will come down drastically and we will be able to manage.
In fact, this year, semiconductor shortage, what it affected us, it affected more our supply. Like in Israel, they are not able to supply because they are not getting this semiconductors, and those were important part of our LR-SAM, etc.
Okay, thanks, ma'am, for the detailed answer. My other question is on the non-defense area. We had actually highlighted quite a lot of initiatives which Bharat Electronics as a company is taking. On the we have talked about battery side, medical electronics. If you can just give some update in terms of how are things progressing on the non-defense portfolio.
See, on the non-defense, first coming to the rail and metro business, whatever we developed for DMRC, they gave us a trial order, and the trial order is almost, the supplies have got completed, only the final evaluation is taking place. And after that, I am very sure all metros will be asked to take the solution from only BEL. So that is a very good opportunity. Other than that, what we have seen is the next for big ticket item for the metros is the communication-based train control system, for which the Ministry of Urban Affairs, Housing and Urban Affairs is funding us to the tune of 200 crores, around 208 crores.
Yes.
They are funding this 208 crores, and they have asked us to develop the complete CBTC, which involves two types of radios. So that radio development we have already started, and this has got a big potential that once we succeed in this, for all the metros put together, the business potential in the next 2 years is likely to be about 7,000 crores. For all the metros which is there as of now. If some few further upcoming metros are there, and then obviously this will go up. And this is one major item which government is targeting, and the approval, the Ministry of Housing and Urban Affairs has got it from PMO. So there's a lot of focus, and there's a lot of mandatory reviews which is happening at the level of the secretary. And I'm very sure in the next 12 to 18 months we will be able to develop this. So this is another one, and similar one with a little bit of customization is required for the railways. So that work has also started in our R&Ds along with RDSO. And of course, coming to medical electronics, we didn't want to, as DF was also rightly telling, we wanted to have our own ventilators, our own thermodialysis equipment and other equipment, because others were asking quite a huge amount as royalty and technology transfer. So we thought that, okay, these type of equipment do not, we feel that what amount which they are asking is really not worth it. So then we have taken up the indigenous development. They are nearing completion. In fact, one of them has gone for certification. The only issue in medical electronics is that certification takes a longer time. So once that is done, maybe next year onwards, we will start marketing them. And the product which we have developed is available at half the price at which the market is right now giving. So there's a good potential for that. Only thing is we have to complete our development and get the certification quickly.
And Madam, I would like to add,
sure.
like regarding this e-mobility programs, we have already won the charging infrastructure on 4 or 5 highways, and the management has already sanctioned some 40-50 crores worth of investment, and we are going to install our chargers. And these chargers are also, these fast chargers and slow chargers, medium fast chargers are also under development with our R&D setups. And of course, the batteries, which we keep on telling, already we are making good investments in this for making some underwater applications, lithium-ion batteries based on the technology, indigenous technology developed by NSTL, and also making the battery packs after buying the cells from outside and designing our own battery packs with battery management systems, etc. We are going to put an investment of some 15 crores for putting up the state-of-the-art battery pack manufacturing plant. So in e-mobility, we are going from both sides, battery as well as the charging infrastructure. And DRND, if you would like to say for some other elements of e-vehicles we are doing.
Right. We have taken up batteries of different capacities now, designs, not only for torpedoes and other fuel cells has been brought out from NSTL. We are taking the technology. That technology we are going to extend to commercial segment as well over a period of time. So we are establishing a huge infrastructure for that in our Pune plant. So this, whatever, as of now we are establishing is for particularly the torpedoes and other things. With that experience, we will be able to migrate to the next level and have the basic batteries itself manufactured in Pune rather than the battery packs. So we'll have a complete downstream diversification, so integration, I mean to say. So it will give us a lot more revenues.
Something on power electronics also.
Yeah, battery management systems, and also we are planning to indigenize. Earlier we have done most of the charges that earlier we have done based on the lithium-ion cells. We have done a lot of charges, and now fuel cells also we have made along with the academia. We have realized the fuel cell, which basic cell has been realized now, using methanol as the fuel. So future we are going to expand it, then make many more cells. We already use this cell in one of our projects and border security surveillance. So this will get expanded to radars and other areas also, this fuel cell, especially the mountains and all, where the DG sets make huge noise. The fuel cells will become a very good alternative where there is no noise whatsoever. And so you'll be able to operate silently and over a very long periods of time.
In fact, what we were previously talking about putting up a lithium-ion cells plant in the country. Now we are having a rethink on that, as all other players, they are in doubt that which chemistry will be the chemistry of future. Now people are talking of sodium chloride batteries and all that. So we are studying this, that which particular chemistry we should adopt. So we are slow on the lithium-ion cells for the e-vehicles per se, but for other applications like defense applications, we are going ahead.
So just if I may
Also
squeeze in.
One more point for the smart city solutions. Also, right now we were only concentrating on being the integrator. But over the last couple of years, we have developed our own middleware. We have developed the IEEE software and other important radars and other things. Also, we are developing our own. So over a period of time, the value addition by BEL will also grow up drastically, and the material content will come down.
Thanks, ma'am. It's heartening to hear, such a great progress on these aspects. Just lastly, from my side, if you can also help us understand the underlying margins, which we could expect in this, non-defense business. While I know in the initial phases there might be some, because of the lower volume, but as we scale up, any thought process on the margins in the non-defense business?
No, here also it's quite comfortable. It is not that it is stressed too much. It is at par with defense. In fact, because it is getting indigenized for the first time, the customer has also, because they are able to see the difference. Something which we were importing at say 100 rupees, now it is available at 40 rupees. So they are also not very keen on going through everything and then finalizing the prices. And so it is quite comfortable, and I think that trend will continue.
And actually, it's very difficult to answer this question because we don't have a uniform margin policy. It depends if some market we are entering into the first time, then we have a penetration strategy. So all that, sometimes we go very low on margins to make an entry. So we, as a defense company also, we are not, exempted from reporting the segment-wise profitability, etc. So we always maintain that overall we will be able to maintain this around as 20 to 22. And it takes care of all, because where competition is hotting up from the all private sectors coming into that particular business, but where now this metro and all, where DMRC is partnering us. So there it will be a different story.
Great, sir. Thanks for taking our questions. That's all from my side.
Thank you.
Thank you.
Next question from Abhishek Poddar. Abhishek, please go ahead. Abhishek. Question is from Tesh Agarwal.
Yeah, hi. Good afternoon, team. Firstly, congratulations for your inroads in this market. My first question is, I understand you are aspiring big in healthcare equipment or battery manufacturing. However, it seems BEL has neither participated in healthcare equipment nor battery manufacturing PLI in the country. What is rational to stay away if you are so serious?
Just PLI. As I told you, the battery, we are right now more bullish on battery packs design and manufacturing. Lithium ion, we didn't want to go, as we are looking with caution whether this is going to be the technology of future or no. And today, if you go for this kind of a big investment, and tomorrow, as other Reliance and all also, they are talking of the sodium-based technology. So we have not gone for it. Definitely, yes.
And on healthcare equipment?
Healthcare,
We are not that
not
big
that big.
at the
Correct,
moment.
correct. We are just
With ventilator, we got this opportunity and then we decided to go full-fledged in healthcare equipment. So still we are developing our own. And
the oxygen concentrators, all the development, our own development is happening. Maybe next time we'll have to see.
Understood. In the past, you were also looking for semiconductor manufacturing. With the government having so much plans on semiconductor.
Yeah.
What is our strategy to participate in this?
Yeah, see, I mean, of course, it is just an initial thought. We had some discussions. The plan is that Bell and HL together will apply for setting up a fab in India, for which the RFP is already issued, and I think sometime in the second week of February we have to submit as per that PLI scheme.
Design linked incentive?
Design linked incentive, anyway, that Bell will be doing separately. The other one will be along with HL.
Understood. But we will have the technology to go for like
we will have to get it from from outside only. See, no company in India has that technology. So anybody will have to, all of us will have to look for some partner outside.
Understood. And lastly, ma'am, if you can touch upon more on your software as a service. In past few quarters, you have highlighted your big aspiration out there. So what are exactly you doing here and what will drive the growth?
No, see, so there are a lot of many software projects which is coming up, even at the government sector itself, which government is asking us to take it up, but somehow we are not able to do because the present team which is available is fully busy with meeting the in-house requirement. So we are trying to augment that team and then set up an ODC somewhere either at Visakhapatnam or some other place in north, and then try to see if we are able to augment by that way and then take on these government projects. So the projects which have been indicated to us by the government itself is quite big ones, huge ones. But it requires that much of manpower, and immediately we are not able to scale the manpower to that requirement. But we are confident we'll be able to do it. Maybe a year or from now, we will be able to see real benefits coming out of that team.
Understood. So most of our growth driver in software and service would be from government orders, right?
Yeah. To start with government orders, because that requirement itself we are not able to meet.
Understood.
See, every government is trying to, whatever they are doing, they are trying to digitize, by asking us to develop any governance platform, this, that. So that itself is becoming, it's a huge business is there, but then we are not able to put the right resources there.
Preventive maintenance using IoT also.
Correct.
Understood. Thank you and all the best.
Thank you so much.
Thank you, Dipesh. Next question is from Abhishek Poddar. Abhishek?
Yeah, thanks, Sir Kunal. Thanks for taking my question. Madam, regarding this large orders that you spoke about beyond 2 years, if you could give more details about, QRSAM, MRSAM, LRSAM, Akash, and Shakti, how much all of it can constitute and what time frame can we expect these orders, whether it will be third year, fourth year?
No, see, Akash Army, what BDL is likely to get, they are going to sign the order, I think, any time now, and we should be getting it in the next financial year. That will be about 4,500 crores. Himshakti, actually, we are targeting by March of this year. If not, it may spill over to the first quarter of next year. So that is also around 3,300 or so. Then we have MRSAM will not come in the next financial year, but after that. So QRSAM and MRSAM are quite big ticket items, and QRSAM alone is some 40,000 crores. MRSAM may be around 20 for this another 18 fighting units, which Air Force is now telling. And then we have some other items like the Atulya, another fire control radar for the Indian Army. Then we have the mountain radar again for Indian Air Force. We have this medium power radar. We have this, what is that other?
We are also getting CIWS.
CIWS, we have cleared the trials. Then we have another project called ADC NRS, Air Defense and Control and Reporting Center system, again from Army. That also is about 2,000, 3,000 crores. Then we have different types of EW systems, Shatrughat, Samaghat, Himshravan, another 3,000, 4,000. Then we have BMP upgrade, around 2,000. So a lot of orders are there. 2,000 plus some 15, 20 big ticket items we are trying, which will materialize, 1 or 2 will happen by March of this year, and the remaining will spill over to the next year. That's why I said conservatively 15 to 17,000 comfortably we can tell for the next 2 years.
Yes.
After that, then it will pick up.
So, madam, after that, could we see if any of the large orders materialize, like QRSAM or MRSAM?
Yeah, QRSAM, that is what I said. QRSAM will surely come in because now the Buy Global case which Army was pursuing has been dropped. Ministry has told that you cannot go for any Buy Global case. So that gives us a huge opportunity. So we have already written to them, and DRDO has also told them that this system is ready for induction.
Army trial will start now.
Correct.
Once the trials are done,
Something about autonomous boat.
And how the order will be sized up? Would it be one order of 30,000 crore or it will be multiple orders?
See, as of now, they are telling one order, but then we feel that it will be too much to expect from them. No, the whole budget will be consumed by this. So they may split it and then give us, or they may give us a big order spread over a period of 6-7 years, and they may reduce the advance amount.
That's right. Second question is regarding the R&D cost. As the top line increases by 15 to 17%, should we assume that on the basis of sales, percentage of sales, the R&D will remain same like 8 or 9%, or should we start seeing benefit in the margins because of lower R&D spends related to sales?
The question is not clear. What you are saying, R&D cost 11%? I'm not able to understand.
So I'll rephrase.
R&D cost?
Expenditure.
Our investment in R&D.
The R&D expenditure that we do, which is close to 8 to 9% of the revenues, because our top line will increase by 15-17%.
Yes.
Should we start seeing some benefit because of the lower R&D as a percentage of revenue?
Yeah.
It's not lower R&D. Basically, the absolute terms is hovering around
1,000 crores.
1,000 crores.
Or will continue.
And it will continue. And definitely, if the top line is increasing by 15-17%, it will not going in the same proportion.
But then we should also keep in mind that a lot of development projects are being taken up by our various R&D centers.
Yeah, and now our strategy also is slightly changed that we are collaborating with the collaborative R&D we are going for.
Industries, with startups.
Correct. And we are funding them also, so that to ensure that we are able to quickly get that the time to market cycle time is reduced drastically. So some amount of funding goes to them also. So it will hover around 1,100 maybe in absolute terms.
At least for next 1 or 2 years.
1 or 2 years. Yeah. Correct.
Okay, understood. Thank you. All the best, sir. Thank you.
Thank you.
Thank you. The next question is from Sanjay Doshi. Sanjay, please go ahead.
Yeah, good afternoon, ma'am, and the team, and thanks for this opportunity. First of all, I would like to congratulate the entire team there, not only for this quarter, but very consistent performance over last many years now. And also the important role that the company is playing in Make in India initiatives, not only for defense, but now even non-defense. So congratulations on that. Just a couple of questions, ma'am, from my end. One is, can you just help us with your capex plans for the next 2-3 years, including this year? Annually, what kind of capex we will be having?
If we see for last 3-4 years, per annum it's around 600 crores we are doing, and we have already sanctioned projects. There were some 3,000 crores. The remaining portion is how much is 13? Some half of it is already done. So
2,000 crores is pending.
2,000 crores is pending, which we'll be doing in the next 3 years. The plants are under construction. So typically, at the moment, as per sanction projects, it is 600-700 crores. But in between, if this big ticket investment comes, like FAB and some other thing, then we'll have to share separately.
So for your missile system potential orders and radars and the basic areas which Bell is a key player, there we have adequately planned physical infrastructure, right, ma'am?
Sorry, can you just repeat?
Leaving aside new areas like FAB, if it is the core like missile systems or radars and other areas, for that the investment is well planned for the next 4-5 years with this capex.
Yeah, it is planned. It is planned to some extent. Like for LRSAM also, the radar which we are manufacturing, because of that we had to set up quite a large numbers of NFTRs. We have done that, but then to meet the requirement, future requirement, where all radars will have to be tested, in that we'll have to augment some more. So it's not that it will be this around 100 and 150 crores will go in that manner itself. Even for our missile systems, if the requirement is quite large, then to meet the overall delivery timelines, we may have to augment the facility.
And quite an investment we have already done for this LRSAM and Seeker facilities, big NFTRs.
But Seeker now they are telling that you have to double the capacity, so we need to see. So some amount of augmentation will be required.
Both IIR, Seekers also are coming up in a big
correct.
Design successful, now successful. They are going to build 50% of the Seekers in that.
And last question, sorry ma'am, you and our CFO highlighted the R&D expense, but I just wanted to understand what is the absolute engineering strength in the R&D we have now, and what has been the change in the last 12 to 15 months in terms of any change in that number?
The R&D.
It is in the same range.
Engineering strength is around 40% engineers are there.
Basically, we have diversified more into the module subsystem level also. So that earlier we were doing components. Now then we moved to microwave modules, super components, what we call PR modules, homodine receivers, super heads. Then we went into the power amplifiers. So we have expanded our design horizon, spanning the RF components in a big way. And also the MMICs, we have entered into MMICs in a big way because they are the MMICs are liable to be banned by the advanced countries against supplies to India. So we have established the capability in MMICs today. We have done in the RISC processor also, the SOC. We have done the basic design. We have established ourselves as a design agency.
No, strength of engineers they are asking.
Strength of the engineers, every year it will be about 100 to 150 people. Now we are about 2,600 people in R&D in Bell. So every year we are getting about
2,600, yeah.
Okay. Thank you very much.
150 get added every year.
Yeah.
Thank you very much.
Thank you.
Sir, we can have a last question, please.
Yeah. Sure, sir. Can we take 2 last participants, please?
Okay.
We have the next question from Sumit Kishore. Sumit, go ahead.
Hi, thanks for the opportunity. Could you please elaborate on the experience as far as working capital management is concerned so far this fiscal? What is your cash and cash equivalent position, and how has the receivable position trended so far this year?
Yeah. The first of all our requirements we have met through our internal accruals. We have not resorted to any debt or even the limits extended to us by the bank. And very big impetus is being given to collections, and Delhi a full-fledged office has been established. Last year we could collect more than 18,000 crores, and this year also we are targeting the same kind of amount. And already I think more than 11,000 crores we have already collected. At the moment, if you talk of receivables, they are standing around 6,000 crores. And cash equivalents are hovering around 5,000 crores, and that is showing in our other income also, where 100 crores income has gone up on account of that. So working capital is nicely managed.
So there has been significant improvement in the receivable position as compared to the previous year.
Yes, in fact, inventory has slightly gone up because of to meet these emergency orders which we have got, and which slightly got delayed on account of this components, etc. So that inventory has gone up. Other things are nicely in control.
Okay. Just to understand better the comment on taking exports up to 10 to 15% of the business, what is the current percentage of order book that is for exports? And if you could also break up your order book into defense, non-defense services, that would be helpful.
See, export order currently is around $300 million US. So that means around 2,200 crore.
$300 million order book.
Yeah, order book may be around 420 or so. This year's acquisition is around 300, 273 or something. 273 plus 73. Okay, order book is...
export orders is $300 million.
Correct.
Some 3,000 crores. And this one is of 56,000. Okay. So that is 5%.
5%.
5%.
Okay. 5%.
And as you were asking, at present our export of the total business is around 2.5 to 2.6%, which
of course, now that order acquisition is around 5%, then okay, this trend will follow.
But ultimately, as target, the ministry's guidance to us is to take it to 10%. So we are putting all the efforts. We are opening overseas offices, almost all the areas of interest to us, and that's why this is bearing fruit even from the developed country like US. And this order may be a game changer, I think.
Yeah. It will be a game changer.
Yeah, we can become a factory for
US based. Yeah. And that order is actually 73 plus 500 million is also there. Fully.
And once it's nicely executed, it will be a game changer.
And coming to civilian business, non-defense is around 6,000. I will give you a rough figure.
Yeah.
6,000.
Around 11-12%.
Around 8,000, 7,000. No, 7,000-8,000.
With 12-13%.
Correct, 12-13%.
Okay. And services is how big?
Services is again 10%, around 10%.
Okay.
See, services what happens, order book, because services what happens, the AMC orders will keep coming every year.
Yes.
Not all of them are spread over 5 years, 6 years.
Only thing it is playing 10% role in our overall turnover.
Correct.
Yeah. So just one clarification on a previous question. This 54 crore lower provisions is for the third quarter or for the 9-month period?
It's for 9 months. 9 months.
9 months.
Okay. Thank you so much.
Thank you, Sumit. We have the last question from the day from Renu Baid. Renu, please unmute and go ahead.
Yeah, thanks for the opportunity, sir. Just 2 quick questions. A, if you can just help us understand, while you mentioned quite a few large projects, etc., which are there in pipeline. Can you help us mention, so in the next 12 months, especially on large projects like Akash, LRSAM and ICCS, which are there in the backlog, what percentage of these orders have already been completed and executed? And what is the current size of these projects in the backlog?
See, the exact percentage I will not be able to tell you, but the next year's turnover for these projects will be on similar lines. It's not going to see a big dip, except for ISCCS.
ICCS would getting completed.
Yeah, it will come down a little bit. It is not getting totally
completed. It will not get completed. Now we have got extension for it.
Correct.
By 22 and 23.
But it will not be the same range. It will be slightly less. But Akash and other things, if you LRSAM, will be in the same range only.
At 2,500-3,000 crores.
Yeah.
Okay. And because of the shortages of semiconductors, what are the kind of slippages that you're seeing in terms of supplies coming in from Israel, specifically for the LRSAM project? So is it also in the same tune of revenue slippages which you have indicated of 500 to 1,000 crores, or it could be higher?
No, it will be around the same Same lines, I think. Around 300-400 crores shortage we are expecting in
On LRSAM.
On LRSAM.
Then,
but other Israeli other projects like Chennai, we are doing an electro-optic payload project along with the Israeli company. There I think there will be a big hit. Then there are then we are doing some project at Machilipatnam again with an Israeli partner. That there also I think we have not got any confirmation yet.
Sure.
So these
and for the
together itself will come to around 300 crores. Yes.
Got it, ma'am. Also, to the DF, sir, what is the capex that we have already incurred for the 9 months FY22? Actual capex incurred?
It's around 340 crores.
340. So actually compared to the 600 to 700 crores average, we might be slightly short and may end up spending something like 500 odd crores this year?
We will be managing this 500 to 550. Because many things which are already ordered, etc., now they will be landing by the February and March.
Right.
The commitments are there.
Sure.
In fact, we are putting up some facilities of this manufacturing gyros. So some particular machine, because these gyros goes in the missiles and at the last moment they denied us those machines. So that also impacted our this expenditure.
Got it. And just another bookkeeping question. YTD, what has been the revenue mix between defense and non-defense revenues? Services you've already mentioned 10 to 12% of sales. But what would be the broad split between defense and civilian? Revenue mix.
9 month ending?
Yeah.
Then exactly this data at this moment is not available.
But we'll tell you. We'll maybe another half an hour or so we'll let you know.
Yeah.
Done. That should be manageable, ma'am. Thanks and all the best.
But I tell you when we close, the non-defense will be hovering around 14-15%, and the same pattern is going to follow this year. Because this year not EVM, VVPAT has taken place. Again, that is also facing the big crunch of semiconductors.
Correct.
Got it. Okay. Thank you, team.
Thank you, Renu.
I can only assure you, whatever I know, of course you guys know better, that we have managed this semiconductor shortage better than the industry as a whole.
Correct.
Surely. Sure. Thank you.
Thank you.
I would like to thank the management of BEL, especially Anindi ma'am, Dinesh sir, and the entire BEL management for taking time out for this and answering all the questions in detail patiently. Thank you so much for taking time out, and wish you best of luck for future quarters.
Thank you.
Thank you so much. Thanks a lot.
Thank you.